TheoTRADE. This is Don Kaufman. October 4th, 2023. Just moments to go to the cash close here on this Wednesday afternoon. S&P's got a bid back under them. You know, I know that everybody looks at this marketplace and like, look, it's ripping back to the upside. First of all, it's not ripping anywhere. If you look at the daily expected move in the SPX, we're basically on it. Effectively what I'm saying, for those of you that do not speak expected move geek speak, there are two types of expected move. One is the weekly expected move. This week, we're looking for about an $80 expected move. That's throughout the course of the entire week. Move down $80, up $80. But we also have what we term daily expected moves. Where can you find the daily expected move? On thinkorswim, you cruise over to the analytics. Okay, go over here to think back. In fact, I'm even going to highlight this for you. So right here, okay, under analyze, come over to think back. And then the next aspect is open, of course, the October 4th expiration, which is today. Now, this is based on yesterday's closing price. The expected move for today is about, just shy of about 36 bucks. So look at that. We are spot on, people. Spot on the expected move. And again, if you're not paying attention to that, you're missing the bigger picture. We're not doing anything unusual. So what? We got a little bit of a bid back under us. I mean, look, I'm a big proponent of you got to go up to go down, right? And the whole question right now for markets, what's going to break first? You know, the equities, again, or the bond market. And that's exactly what I'm going to be covering on this evening's video. Let's get right down to it here as we examine not necessarily just today's trading session, but some of the price action we've seen earlier this week and what it kind of amounts to. So today, okay, and there are the closing bells coming here. But today, what do we have right now? A little bit of a bid back, okay? Don't get too hopped up about it. And again, because the marketplace rallied, as I said moments ago, I kind of have that feeling that you got to go up to go down. One of the first things I want to show you is that the rally today was met with incredibly, incredibly low volume. It really wasn't much of anything. In fact, I wanted to bring this up. And again, we'll just cut off that last couple of moments. There's always a huge volume surge. But I wanted to bring this up because it just doesn't look right for a huge bid back onto the marketplace. And the reason I'm bringing this up is because it's not. Like the S&P is rallying up some 30 handles. Okay, there's no conviction to the trade. You can see things were wavering early on in the trading session. Volume was absolutely ripping. And then we started to actually really have a bid under us and volume completely dissipated. There was no activity to the upward momentum to the marketplace. And again, I further this with a lot of what you see inside of markets, okay, in the S&P futures is hedging activity. And you got to recognize that we got this big rip to the upside here, literally from 4270 to 4300. So 30-point rip to the upside. That's exactly where we are pretty much right now. And there's just no volume. We're not even substantiating but 3,000 contracts a minute in trade, which is indicative of very little hedging activity over there. So it's a very, very mild bid back, maybe some short covering, but don't get too hopped up about it. One of the things that really held the market back, though, today was the energy sector. If you haven't looked lately, the energy sector is just getting decimated in the last couple of trading sessions. On a year-to-date percentage basis, this thing was up 9%. That's only 3-4 trading sessions ago. It was up 9% year-to-date basis. Now it's up 1% and change. That's just, again, it's a brutal move. If you look at this, though, from an expected move point of view, phenomenal outside of expected. Now, meanwhile, what is interesting is that the financials today got a little bit of a bid back under them. They got punished in the first 2 trading days of course, this week. Now, push that aside for just a second. Again, today's rally, okay, was brought to you by big tech. Energy sector held us back. The reason I'm actually kind of detailing sector by sector before going into any depth about the market, because we're going to talk about, what's really going to snap this marketplace. Is it going to be equities? Is it going to be bonds? And the answer to that is yes, both. But right now, the interesting area is very selective rotations. That, okay, is again, it's very unusual in the midst of what I would look at as, yeah, this is some volatility in the marketplace. It's really unusual because the advanced decline line is like 50-50. It's a slop fest. We're still seeing very selective rotations. Now, I don't believe that that's a positive thing for the markets, especially when it comes to big tech. So let's talk about big tech for a second. You've seen Microsoft got walloped, okay, yesterday. Today, almost a complete reversal. Huge bid back under. In fact, from an expected move point of view, and I like to use the auto expected moves because it really kind of highlights like, look, got smacked, right back on it, right? Microsoft, it's all good. It's up on the up on the week. You look at something like Apple. Apple's almost to the upper edge of the expected move. You look at something like Amazon. This one got actually hit hard yesterday, clawed back. The reason I'm actually taking you into individual equity, okay, and especially tech, it's incredibly selective. This does not reek of volatility. And I'm actually really bothered by it because when you open up that kind of can of volatility, the markets typically get bought and or sold indiscriminately. You just see markets like smack in the S&P 100, okay? You would see like on a big up day, it doesn't matter. This would be 95 products to the upside. There's nowhere to run to, nowhere to hide to the upside. Meanwhile, in big down days, like there was a point, I'll bring up yesterday's trade. It's a point yesterday where, look, crap got crazy in yesterday's trade. It's a point yesterday, and what was the advanced decline line? It wasn't that bad. Again, there were still areas and pockets of strength in the marketplace. Frankly speaking, I don't think that's actually a good thing. There's just not, okay, a lot of places to rotate into. I mean, you are seeing still like the dollar tried to sell off today. It didn't do a very good job of it. Okay. What I'm saying though is, again, on the buy side, it's not correlation. On the sell side, though, we're not seeing correlation. And I'm really bothered by specifically technology. In fact, I'm going to come in here and highlight, okay, what really kind of resonates with me in this marketplace. What we often term like it's the Magnificent Seven. Look, one of the things we're seeing is, Tesla's up like 6%, and across the board there was buy side activity pretty much in tech. Let's just black out Netflix. I know I have it in here, but just get rid of it. Anyway, we're still seeing like rotations on big down days. We're moving away yesterday from Microsoft. Okay. But some other underlyings didn't necessarily get brutalized in here. Again, rotations. It's almost like, they're jumping from lily pad to lily pad over here, looking for places to hide. Okay. Why am I bringing this up? Because that, okay, is what needs to dissipate in the midst of some volatility, especially if you're sitting there going, when is this volatility going to be over? Frankly speaking, okay, I'm not sure it's actually gotten rolling just yet. And that's why I asked a question, what's going to break first, equities or bonds? The equity marketplace, and I've continually reiterated this, to me, big tech looks unscathed. Evidently, that's not true here in the energy sector. It's definitely not true. You look at something like XLU. Oh, that's ugly, just ugly. There's some sectors that are just getting annihilated. You look at something even like Caterpillar, okay, all of a sudden came off the edge of a cliff over here in the last couple of days. Boeing, okay, has that had an up day? Again, there's very few pockets, okay, of strength in here, but tech continues to be incredibly resilient. If anything does, deals with interest rates though, it's pure ugly. If you haven't looked, like Schwab, okay, big sell side activity in here. KRE, I wanted to bring this up. This is regional banks, very close to some of the lows. Look, okay, this then relates right back, of course, to the bond market. The bond market, well, that's it, people. This is the first update that we've really seen where it substantiated almost a 1-point move. But one thing, again, that kind of resonates with me is that the volume, okay, it wasn't magnificent. Like it didn't feel like capitulation. We hit bottom and then rallied. But again, I'd like to see a little bit more volume, a little more oomph behind that. And unfortunately, we've got more data dropping, of course, throughout the course of the remainder of the week. If you take a look at the calendar, even coming in tomorrow, like jobless claims and so forth, frankly, that's not precisely the one I'm looking at, but clearly the employment situation could be a very much a market moving event. Nevertheless, back over to the bond market, I'm still not exactly feeling warm and fuzzy in bonds. One thing that I've also been reiterating, just day in and day out, stop listening, okay, to the talking heads about interest rates. Forget about it. The one thing that I need to express to each and every one of you, okay, is that the bond market at this point is more about price action of the bonds. Okay. The interest rates like down the road, like if it goes to 5%, the mortgages are going to go. Of course, the mortgages are going to go up, but who cares about that? You got to start thinking about how many regional banks, how many insurance companies, okay, how many really big banks are holding ZB? How many risk managers right now are like, oh, I thought it bottomed out at 119, and they're sitting and holding, okay, tens of billions of dollars of bonds at 110 or 111, okay? And it's, again, this is why I say this is going to be a little bit of panic at the disco, and it is not. This ain't about retail traders. This is about the biggest institutions in the world that are holding crap that have to mark to market. And again, there's many firms that have already come out and said they're sitting on $20 and $30 billion of losses. Of course, everybody turns around and goes, but it's okay. It's a paper loss as long as you hold it to maturity. So I'll see in 30 years if they bought that thing more recently. Nevertheless, it's brutal out there, and if they have to mark to market, okay, there can be margin issues. So we start seeing the volume surging inside of the bond market. Quite frankly, I'm sorry, I just don't think it's over yet. And it's one of the hardest things to try to justify when the bottom is coming in. I'd like to see a few more days, frankly, okay, of a rip-roaring rally. And I do have a position on for that, but not because I want to see bonds go up. I think bonds at this point, they have to go up before they actually continue what would be a fairly precipitous slide. The problem you have inside of the bond market right now, though, is every rally that we're seeing more people come in and actually sell their portfolios. And that's how you can actually start to spiral out of control. Got to think about this because, once again, whatever you might think about bonds, not about interest rates, it's about a fire sale that's actually underway right now inside of the bond market. And I'm not sure what's going to break us. Is the bonds going to break the tech market, okay? Or is tech all of a sudden going to start to correlate and just snap the back, okay, of the entire, both equity and bond market? Look, those are the two things to watch the remainder of this week. You watch big tech. Clearly, we're not going down in the S&Ps without big tech going down. Okay. In addition to it, if the bonds start to see some more sell side activity, it's on. Like, we're at a point also in that bond market. You can look at the TLT and expected move all you want. Okay. We are outside, oversold, okay, overcooked to the downside, but nothing matters. All right. When, people kind of feel that their livelihood is on the line. So with that today, got to bid back to the marketplace. You had volatility calm down to some extent. We're still very, very close to being in volatility backwardation, okay? But really, right, it's this bond market and specifically the tech, okay, that's going to take it to this marketplace in the days to come. Thanks, everybody, for joining us here at TheoTRADE. Have a wonderful evening. Bye-bye.